Hello traders, welcome to the channel. Today I got into some UNG, the United Natural Gas ETF fund. I'm gonna share with you why in a minute. As always, this is for educational purpose only. This is not any financial advice. So as always, the first step I always look at is the market. To me, the market is the SPY. You all know that the market right now is very volatile. It can be up one day and then down the next, or it can be up in the morning and down in the afternoon. But if you zoom out a little bit, you can see that it's maybe broke down this near term uptrend. But if you zoom out to the weekly chart, this is where I draw this line here. This one, you can see clearly that it's still an uptrend, although it may be forming, I don't know, a head and shoulder pattern. But we're not in the prediction game, so we're just looking at the chart and then see what the chart tells us. So right now, in the long term, SBY or the market is still in the uptrend. Coming to the individual ETF UNG, as you can see, this red line here is the 200 simple MA. This blue line here is the 50 simple MA. And you can see that it was in a downtrend for a very long time. And then it started to bottom, and then over 5-6 months, it spent 5-6 months to form this bottom. And then finally, the 50 broke through the 200 MA, which is called, some people call it the golden cross. But anyways, you can see that if we draw a line here, doesn't need to be perfect. You can see that we're in uptrend, right? And then the reason we say that it's an uptrend is because it was going up, and then it pulled back and it hold, and now it's going back up. And the short term is doing the same thing, because you can see that it was going up and it passed this double top resistance area at about 2160, and then it pulled back, it consolidated, pulled back to the trend, close to the trend, and then it found support near the high of this green candle. And today it looks like the buyer got in and it wants to push back up again, so I got in. This for this one, the stop loss, if you want to keep it tight, you can use today's candle. I got in somewhere here in the middle. It will be about 3%, maybe 4% risk. Or you can use the red candle yesterday, or last trading day's uh, bottom, the red candle, as the stop loss. That's about 5%, give or take. But the potential reward is that, of course, the first target is to take out this high here, the recent high here at about 22.7, and that's about 5% gain. And then if it can do that, and then based on what the chart is doing, it looks like it will. The next target is to take out this low here. That's about 25.60. You can see that will be 18%. And then if it can do that, the next target will be this two little double top here at about 27.40. That's 26%, if it can do that. But then if we come to the weekly chart though, as you can see, weekly chart, it has been down a lot. It was a $100 ETF, and then it formed this bottom. Took a long time, took a whole year to form this bottom. And then right now on the on the weekly chart, it has break through the 50 MA of the month of the weekly chart. And now if it can only go to the 200 MA, that will be a huge gain. But before you can do that, you will have to take out these tops here, this the box, top of the box here at about 30, 32-ish. If you can do that, then the next target will be the weekly 200 MA at about 44. But then you can see that if you can tackle the 200 MA on the weekly, that's a 100% gain. But if it just come halfway through, not even halfway, then it can come to this resistance area. That will be a 40% gain. So this ETF has huge potential, and then the risk is a little higher than what I normally take. But looking at the chart, it's given that trending chart vibe. So I have a lot of high hopes on this trade, but the market doesn't care what I think. So we'll see how this trade actually plays out. So hopefully you'll find some value in this video. I'll talk to you later. Bye.